We've all heard the phrase buy low, sell high. Simple, isn't it? But when markets are crashing and the panic is everywhere, it seems almost impossible. Today, I'm going to show you why bear markets can offer you some of the best trading opportunities in a lifetime. I will top this up with 3 simple charts that even a toddler can understand and 1 real life event that could have broken the financial markets, guys. And if this is not enough, I will also include our latest double digits returning trade, which was 1-to-45 risk to reward ratio trade on Dow Jones. Bull markets go up, bear markets go down. I know it's pretty obvious, right? But when fear sets in, even pros forget about their trading basics. And knowing in which part of the market cycle you're in is crucial, guys. In the next chart, I will walk you through bull versus bear markets. This chart visually compares the percentage change in the market during bull and bear phases. The bull market shows positive change of approximately 40-ish%, represented by the green bar. In contrast, the bear market reflects a negative change of around 30%. The visual contrast shows how bull markets tend to produce larger gains than the losses typically seen during bear markets. And this offers a compelling case for long-term bullish investing despite the short-term volatility. The next chart will show us why it pays back to hang around a little bit longer after a huge market drop. Some of the biggest daily rebounds in market history happened just after the biggest market crashes. In 2008, a 57% drop was followed by a 75% rebound. And again in 2020, a 34% crash led to the 70% bounce, as you can see in this chart, in record time. In other words, when fear peaks, opportunity often follows. These aren't just fun visuals, guys. This is how markets operate. And when you trade with clarity instead of emotion, you actually start getting to a place where you're having a trading edge. I have shared with you in one of my previous videos how I navigate the markets using my swapping trading strategy, or the double digits day trading strategy as it's most commonly known. And you might want to explore the reason why this strategy works so well. You would also be benefiting from watching this other video on market asymmetry, so you will understand why I'm looking for asymmetrical trading opportunities with capped downside and uncapped upside potential. So click on the link below and watch the video on market asymmetry. But for now, just take a moment, study the charts and understand bear markets, because once you understand how they operate, they suddenly stop being scary. Each event, from the 1973-74 oil crisis to the 2022 inflation crash, shows a sharp initial decline in red followed by a strong rebound in green over the next, I would say, 1 to 2 years. Notably, the 2008 financial crisis saw the deepest drop of around 55%, but also one of the strongest rebounds, nearly 75% followed it. Similarly, the 2020 COVID crash shows a swift V-shaped recovery. As a conclusion, here the data highlights a key insight. While bear markets can be severe, rebounds are often even more powerful, reinforcing the value of staying invested during turbulent times. The last chart reveals something that a lot of traders want and don't realize. Bear markets are very short, but they can drop very fast and hard. On the other hand, bull markets might take years to form, and this is exactly what differentiates them from bear markets, who might take only just a few months. I thought this might be a good idea actually to share with you a real trade I took, which is based on my swapping or the double digit day trading strategy. And since we mentioned the combination between the scalping and the swing trading approach, this cannot be a better time to share that. Plus, the sliding markets, which a trade that was taken last week. I'm recording a video on the 15th of April, so you might watch this video slightly later. But this trade itself was taken on the 8th of April, and I closed the trade on the 9th of April. As you can see here from the left screenshot, this is where I opened the trade and risked around 33 points on this trade. On the right hand side, this was less than a day later. I closed the trade for a 1-to-45, as you can see here, risk to reward ratio. This wasn't by prediction powers, or I don't have a crystal ball for sure. I was just taking advantage of a high probability setup which I spotted in the after the New York Open, and then I positioned myself and the markets propagated. This again shows the power of not trying to predict the markets, just trying to find high probability entry setups, and then based on that, wait for the market to prove you right or wrong. At the same time, trying to risk a very small amount. So my downside, as you can see here, was capped. I only risked 33 points. And in the end, I gained, these are over 1,400 points when I closed the trade, which is pretty spectacular. But again, this was the market environment. Not every trade will give you 45x's. This shows the power of being able to position yourself when the markets are sliding with such a big force. Quick, painful, and packed with setups for those who are ready. And if you feel swamped and you don't know where to start from, guys, I'll just throw in a link below so you can join us in the day trading program. But before you join us, please do talk to us. There were quite a few people that wanted to join us. They signed up for the program, and I can't just emphasize enough how important it is to talk to us first. Don't sign up straight from the page, because we want to make sure this is the right thing for you guys. We're happy to give you a free trial to test the trading room, but you need to talk to us first. Don't sign up on the trading page. I'll see you in the next video, guys. Bye.